Good morning. This morning we're going to be looking at sterling dollar or cable, but briefly want to talk about the dollar index. Now, my colleague Steve O'Hare put out a report on Saxo trading floor yesterday suggesting that the dollar index was reaching overbought extremes, and it was actually now a good time to start fading bullish moves in dollar index. Now we're suggesting selling rallies between 101.50 and 102 the figure. We actually made a 101.54 high yesterday. Now the reason that we're making this call is because we've got a Fibonacci confluence area around about 102 the figure. 101.95 is a 161.8% extension of this 2008-2009 move, and 102.10 is a 61.8% pullback of this 2001-2008 move. So we're looking for the dollar index to be overstretched. Now there's one currency pair that probably is making that bearish dollar move already, and that's sterling dollar or cable. So we're just going to break down the time frames. The monthly chart highlighted a Fibonacci level confluence area, I should say, between 116 the figure and 114 the figure. And we actually made a 115 the figure low. And we've seen quite an aggressive reversal or a move back to the upside. Breaking down to the weekly chart, we can see that that last wave lower is made of fifth waves. We now consider this five-wave bearish Elliott Wave formation to be complete, and we're starting to move again to the upside. Now breaking down to a daily chart, here we had a bearish pennant breakout, move to the downside, again just was slightly short of the measures move target of 113.43. But yesterday, after last week's pretty choppy price action, yesterday we've seen quite an aggressive move to the upside, and this has caused a flip on the daily chart. Now this call offers quite a decent medium-term outlook as well as intraday, because we haven't really got anything in the way of medium-term resistance until 137.46. Now if we break down to a 4-hour chart, the last wave up can be seen in 5 waves, the wave down in 3 waves. So this correction now looks to be complete. Two important factors here on this intraday chart is the fact that we've stalled, reversed or moved higher from the 61.8% pullback level of 123.07, and we've also produced an exhaustion count or a 13 count on the intraday chart. Now we've got to be wary of this trendline resistance, and there is scope for a mild pullback in early trade, which will improve our risk reward on taking long positions in cable. So the call today is to buy sterling dollar or cable at 124.22, which is our bespoke support. The intraday target is 126.45. The medium-term target is going to be around about 137.40, and the stop on this trade can be placed at 123.60.